Super good morning, everyone. Welcome to today's episode of Morning Wealth. Three things that you can look to here: US jobs data shocker, China's trade surplus, and a stunning 35% rally in the airline sector. Currencies and equities traded sharply higher on Friday following shockingly strong US labor market numbers. Instead of losing another 7.5 million jobs in the month of May, US companies added 2.5 million jobs. No one, not even any of the 78 economies surveyed by Bloomberg, were looking for a job growth last month, so the report completely defined expectations. It reinforces the view that the recovery is underway and suggests that the US government stimulus programs have effectively stabilized the economy. The CARES Act provided for forgivable loans if businesses rehire, and that's exactly what we saw in the number that printed on Friday. Half of the increase was in food services and restaurants, who rushed to reopen ahead of the Memorial Day holiday. Because of this, the unemployment rate dropped to 13.3% from 14.7% instead of actually rising to 19% like the economists had anticipated. The only bad news was wage growth, as earnings fell by about 1%, marking the first decline ever for the series. All this pushed the equities higher. The S&P 500 was up 2.5%, Nasdaq was up 2.1%, just shy of the record close. All three indexes posted sharp gains for the week as well. Dow was up 6.8%. The S&P was up about 4.9% and the Nasdaq was up about 3.4%. All the 11 sectors were higher. Cyclicals really taking charge. Energy was up about 7.5%. Financials and industrials were up more than 3.5%. So big risk on rally that we saw on Friday and kind of ended up the week higher as well. Asian equity futures are in the green after US shares soared on Friday. Treasury slumped on the data, sending the 10-year yields to a 11-week high. Dollar dropped as well, and oil looks to extend gains after rising for about 6 straight weeks. Sticking with oil, Saudi Arabia and Russia got what they wanted from the OPEC Plus meeting: a 1-month extension to existing output curbs and an agreement that any member who fails to implement all its cuts will make deeper reductions later. So everyone signed off on the new deal for a production cut of about 9.6 million barrels a day for next month. China's trade surplus surged to a record in May as exports fell less than expected, helped by an increase in medical related sales. So imports slumped with commodity prices. Exports decreased about 3.3% in dollar terms from a year earlier, beating estimates, but also imports plunged about 16.7%. So all this resulted in a record trade surplus about 62.93 billion. Data on the dock this week: we're looking for industrial production for April from Europe. UK GDP numbers, US inflation numbers as well is something that we'll be looking forward to, apart from the big Fed meet that we will closely track. Moving on to equities, it's only about 1 month ago that Warren Buffett exited his stakes in the 4 US major airlines, and interestingly, Trump called it out as a mistake. Amid signs that consumers are starting to return to the skies, the S&P 500 Airlines Index posted a weekly advance of 35%, its biggest on record, and 7 times the broader stock market's 5-day gain. Still, it remains about 39% lower this year. Remains to be seen how it plays out. AstraZeneca has approached Gilead about what would be the biggest healthcare deal in history. AstraZeneca contacted its rival last month, didn't specify terms. Gilead has discussed the idea with advisors, but no decisions have been taken on how to proceed. Investors in the meantime keep piling into geo platforms. Abu Dhabi's investment authority is looking to invest about 752 million in the digital arm, brings the total raise to a stunning 12 billion in less than 6 weeks. Tiffany surged on some relief It surged the most in almost 2 months after Reuters reported that LVMH had decided against trying to negotiate for a lower price. JD.com is seeking to raise as much as $4.5 billion in its second listing in Hong Kong. On the fixed income side, we've seen some record inflows into bond funds. So 30 billion in all bond funds, which is a new weekly record, with high yield posting their second largest inflow of about 8.5 billion. Something that we'll also be looking forward to is the 3-year and the 10-year auction of US Treasury notes that's going to happen today and tomorrow. Moving on to Forex. The NFP report will no doubt go a long way ensuring a brighter outlook from the Federal Reserve this week. The Fed is widely expected to leave monetary policy unchanged, and their resistance to negative rates will be validated by this strong jobs report. Manufacturing and services activity is also improved, which would lead to a brighter outlook. If this week's rate decision is laced with optimism, we could see renewed gains in the US dollar. In general, the rallies in currencies are overstretched. Euro dollar finally pulled back after 8 straight days of gains, but the Aussie US is up for 7 days in a row, and New Zealand dollar is also up for 5 days in a row. The risk rally is strong, but with no major economic reports scheduled for release outside the US this week, it could be time for the dollar to gain back some of the lost shine. That is your market update. Thanks for listening in. Have a wonderful week and stay safe and healthy.